Well, one name to watch on the earnings calendar today is Zale's. Unlike its rival Tiffany's last week, analysts are a little skeptical that Zale's can wow the street. John Erkman has a little bit more from our markets desk. John.
Yeah, Deirdre, it's been a brutal stretch for jewelry retailers. Zale is no exception. The company expected to have revenue, which is a little bit below $350 million, according to analysts surveyed by Bloomberg, which would be a drop of about $30 million from the previous quarter, the most recent quarter that they reported results. And even that number was below what the street was looking for. A reminder that we saw a huge sell-off in this stock after those disappointing results. The stock was off about 20%. In the case of Tiffany, and you highlighted that, a better-than-expected report last week, and the stock reacted very positively. But we know Tiffany's made a lot of progress when it comes to cutting costs. So an analyst at CL King recently put out a note about Zale saying they have more to do on that front, specifically when it comes to store closings, even though they've already been closing a whole host of their stores. And one of the other differences when we're talking about the Tiffany story is its exposure to markets like China, where it's been growing. In the case of Zale, total exposure to the Americas market overall. The other factor, Deirdre, in all of this is the run-up that we've seen in Zale shares. Now, certainly they're nowhere where they were at this time last year, but in 2009, we're still looking at a stock that's up close to 80%. Compare that to what the street is looking for overall. There are no buys on this stock right now. Most of the street has a hold rating. We'll wait for those earnings that are coming out expected at the top of the next hour. Deirdre?
John, looking forward to it. Thanks very much.